Let's get to hot picks. Our guest is focused on ETFs, and he says his picks reflect an evolution from emerging market growth and crypto innovation to hard asset hedges in a macro uncertain world. We're joined by Mike Philbrick, the CEO of Resolve Asset Management. Mike, always great to see you. Just update us, what trends, before we get into your ideas here, what trends are you seeing in the ETF market? Are people moving into particular asset classes?
What's interesting is, yes, that there is a shift afoot. We do have some flows finally into the gold space. We've got flows. We've had continued flows into crypto assets, and you're seeing underneath the surface, or maybe actually on the surface, a shift from U.S. equities and a broadening out to more geographic areas. If you look year to date, you're starting to see the differentiation of the performance between assets like Europe, Asia, India versus the US. So there is definitely a shift afoot and a regime shift occurring.
Your first idea is the iShares India ETFs. Index ETF, XID on the Toronto Stock Exchange. Just remind us what attracts you to India.
Well, India is one of the most powerful long-term growth stories we have globally. Largely an English-speaking culture, population of 1.4 billion, a rising middle class, a booming tech sector, and this opportunity to really push the pedal on manufacturing. As a global head for the supply chain realignment, especially as these global supply chains are reducing their exposure and reliance on China, you've got maybe a key winner in that global tariff negotiation and shifting trade alliances circumstances that are going on currently. So this is, to me, a standout potential in the emerging markets over the coming years, but also, even considering developed markets. Lots of things are lining up in India, and here we have direct access for Canadian investors to Indian equities through the iShares India Index ETF, XID.
Your next idea is in blockchain. It just went public in Toronto. SOLQ is the symbol, the 3IQ Solana Staking ETF. Now, this one is arcane, you got to admit, or a lot of investors will scratch their heads about this one.
Certainly. And before we even start, this should be a small position in any portfolio if you're going to have a position at all. And so Solana is a high-performance blockchain platform, and it's designed to support decentralized applications, smart contracts, digital assets, similar to Ethereum. Many investors may have heard of Ethereum along the way. And what we have here is an opportunity to leapfrog the US investor, just like we did with exposure to Ethereum and to Bitcoin in ETF formats and in formats before American investors got access to it. We have the same thing occurring here for the Solana ETF. So it's a regulated Canadian listed ETF. It's going to have a 0% management fee for the first 12 months. And then afterwards, it's going to have a 0.15% MER or management fee, which is very low. It also participates in staking and yield farming. This gets a little technical, but that creates some yield for the portfolio, helps reduce the fees. And you're talking about another emerging leader in the blockchain space, where you've got this amazing access before U.S. investors get there in Canada. Grant you, you're right. It should be a very small position in portfolios, and it's a unique asset class. But if you're looking in that digital asset space, you now have even more choice in Canada than U.S. investors have.
And then your final one is, it's pretty refined as well, BTGD. It's 100% Bitcoin and 100% gold. How do they manage that, and what is it all about?
Right. So this is in the return stacking lineup, and this the stacked or STKD ETF with the 100% Bitcoin and 100% gold. And in that, what you're doing is you're taking, for every dollar that's invested, you're investing $1 in Bitcoin and $1 in gold. Now, there is leverage in this product. So the way that's achieved is with the use of leverage. But you're combining these two uncorrelated stores of value, both the new and the old. Gold The old classic hedge works during inflation, currency risk, geopolitical shocks, and Bitcoin, the new digital gold, the scarce asset, the hedge against monetary debasement and runaway debt. And the belief in Bitcoin's long-term role in that arc is growing, especially amongst younger investors. So here we have a portfolio where you get 2 for 1. You get a hedge to monetary debasement, debt expansion, and declining central bank credibility. This ETF wraps both of these exposures into one liquid, accessible, US-listed ETF. Very good performance over the last, since its launch, obviously. Gold being a top performer, and Bitcoin really holding in much stronger than US markets. And that's something to be aware of. That's that regime shift, that underlying change in asset classes that's occurring that may not be so evident in the shorter term, but you're watching it happen in front of your eyes as we look back from the beginning of the year.
Mike, always great hearing from you. Mike Philbrick is CEO of Resolve Asset Management.